Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. Today's date is January 30th, 2023. This is the Morning Forex Report, where I take a look at the technicals that are driving the currency markets in some of our major currency pairs. So let's get started. I will start with the euro versus US dollar. If we take a look at this pair during this period right through here, the market stayed within a fairly narrow trading range, up and down, up and down, up and down. And then we re-established a new trading range. This is the new trading range, up and down, up and down, up and down. As you can see, with the 100 and 200 hour moving averages as a barometer to the upside or barometer to the downside. In trading here today, the market fell below the 200 hour moving average. Recall from Friday, the market also fell below that moving average after holding support here and here and here, and sort of tickling it through here without getting too far below that level. So we fell below that level. Thought the market would head lower. We should have headed lower, and we did a little bit, but we found support against this low right through here, which stalled the fall, and we saw the market move back to the upside. And trading here today came down to that 200-hour moving average, found support, moved back down to it, fell just a little bit below that level, as you can see right here, and then rotated back to the upside. So could not sustain momentum below the 200-hour moving average, which is what we saw way back here, where the market had those little moves below the moving average. It could not sustain the momentum and started to move back to the upside. So where are we now? We're back above the 100-hour moving average. That's the blue line in the chart. That currently comes in at 1.08849, and as long as the price can stay above that level, that's more bullish to the upside. On the top side, we do have in the ups and downs, we have this resistance up here. In trading last week, we moved up to this high near 109.28 on 1, 2, 3, or 4, or 5 or so times. In trading on Thursday, we tried to break above that high that we saw, I guess, on what is this? 1, 2, 3, 4. Yeah, Monday, but could not sustain any momentum and started to rotate back to the downside. So 109.28. 8 is our resistance on the top side. 100-hour moving average, ceiling level on the top side. That's how we're going to play the euro versus US dollar until we find some momentum in either direction for this currency pair. Taking a look at the dollar versus yen next. This is the hourly chart for it. And similar to what we saw in the euro versus US dollar, we are seeing lots of ups and down price action in this currency pair. I put some trend lines in play here. This trend line connected this low to this low, and in trading here today, after breaking below the 200-hour moving average, where the market finds support right against that trend line, and we bounce back to the upside. On the top side, we have this other trend line here connecting a high to a high to a high from earlier today, and as you can see, the market is trying to get above that top side trend line. We need to get above it and get above the high from earlier in the Asian session to give the buyer some more hope, and then we're going to start to look at this high right here, and then we go for the high right here, 131.11. This high from last Thursday's trade comes in around the 130.61 level, 130.61 level. And that's going to be a level that we're going to need to get to and through on the top side if the market is going to continue its run in that directional bias. That's where that line comes in. So get above the trend line, get above the 130.61 level. Let's open a door to the upside, or more open door, I guess. We have further momentum, further levels to get to and through. On the downside, we need to stay above the 100-hour moving average, and we are trying to do that. As we can see, as you see here in the chart, we did dip a little bit below in the late London morning session. Could not sustain any momentum after testing this trend line here. So far the buyers are remaining more in control on the dollar versus yen. We'll see if that can continue into the New York session here today. Let's take a look at the sterling versus US dollar next. And this current, sort of similar patterns that we're seeing in a lot of these currency pairs with trend lines and triangles, defining the biases. On the downside, we have this trend line coming in and trading here on Friday. We broke below the 200-hour moving average only briefly, like we did here and here, but this was even more shallow. The market moved higher in trading here today. The converged 100 and 200-hour moving average of 1.23689 currently held support on the downside. Very narrow trading range here in the sterling versus US dollar. As you can see, on the top side, we held resistance against this topside trend line at the highs and rotated back to the downside. So we are in between a trend line. We are in between the 100 and 200 hour moving averages. Those will be our barometers for traders, so either to the upside or downside. And trading here today, we'll see how that plays out on the downside. We also have the trend line coming into play, I guess around the 123.50-ish, maybe 45 level is where that trend line currently comes in and moving higher. So pay attention to that. Finally, let's take a look at the dollar versus Canada. Why we're going to look at this because what I like about this currency pair, or what is in play from this currency pair, is the 100-hour moving average. The high price in trading here today did stall against the 100-hour moving average early in the European session. Also within this swing area here, where we have a number of different swing lows coming through here. Admittedly, we broke below it here, but could not sustain momentum, and then reestablish support here, a little bit below it here, but you can see all the different points here where the market stalled within this low area. Finally, toward the end of last week, we did move a little bit more to the downside here, opening the door for further selling potential. But in trading here today, we did try to move above it, ran into the 100-hour moving average, now trying to stay back below that swing area that comes between 133.44 and 133.58. So pay attention to that level also, along with the 100-hour moving average. As long as the price can remain below this area, the bias remains to the downside here for the dollar versus Canada. We'll see how all that plays out. This week we have a chock-a-block week full of central bank policy. We have the Federal Reserve reporting on Wednesday. Expectations of 0.25% basis point rise. The Bank of England and the ECB are expected to rise by 50 basis points. Those decisions come on Thursday. We also have a U.S. employment report coming out on Friday with about 193 expected. That's down from about 220,000 last month. Unemployment rate is supposed to tick up to 3.6% from 3.5%. We also have ECB flash estimate for CPI coming out this week. It is expected to fall for, I think, the third or fourth time in a row, but it's still up near 9% for that. That result will come out, I think, on Tuesday, and then that's it. And we have a bunch of earnings coming out, including Apple, Alphabet, Amazon, all on Thursday. We also have Meta coming out on the same day that the Federal Reserve announces their decision on Wednesday. That will be after the close. Lots of other earnings, including Ford, GM, Bristol-Myers Squibb, Merck, Starbucks, so on and so forth. This is going to be the biggest week as far as earnings go, and it'll pretty much end the earnings calendar for this quarter. So it's going to be key for the stocks. The stocks are trading lower in early trading, and the Dow down around 170 points. The S&P is down around 34 points, and the NASDAQ is also trading lower this week, or today, down around 144 points as we speak, and interest rates are a little bit higher. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.